Hello, everybody. So this evening, Teladoc reported its earnings, and it's not that good, as my smiley face shows here. Let me just take a step back on Teladoc. So you can see 2017 full year was 233 million. Then they did plus 45% the year after, plus 25% the year after, plus 51% the year after, plus 53% the year after. And today, they've just announced a major stalling in their revenue growth, right? Reported. They only showed growth of plus 18% in 2022 in revenue. And keep in mind, that was with a major acquisition as well. So yes, the growth rate, compared to what it's been the past 5 years, has stalled. But it's actually even worse in my view. And if you follow this channel, I care about revenue growth more than anything. And right now, the guidance for 2023 revenue growth is 10%, plus 10%. And by the way, that's the high range of guidance that I use as a number here, because I'm just assuming that companies are sandbagging in 2023 in general. So the outlook is really, really bad. I don't know what's happening to the growth, but the business is clearly not growing as fast as it used to. If you go from 2017 to 2021, that was outstanding growth, well above my threshold of 30%. I had done my homework on this stock. I really had when I bought the stock. When a stock was growing so fast, you have no reason to think it would stop so quickly. There's something going on with Teladoc. The business is not sticking as much to customers, right? Or that acquisition didn't go well. I don't know what's going on with them. I'm sure the drop of 90% in the stock price, has to put a dent in the motivation of executives. I'm sure of that. But it's nonetheless sad to see this growth so bad, despite the megatrend and the clear megatrend that Teladoc is in. And if you look at their guide, right, their outlook for 2023, they're only showing an increase of 1 to 3% in members. So that means, they could have only 84 million members in 2023, just like they had in 2022. So they could show no growth whatsoever in members, right? And they're even predicting sometimes as little as 6% revenue growth. So you're getting close to the rate of growth of the economy here. That's really disappointing. And so I've decided for me that Teladoc is not a predictable growth stocks anymore. It's not predictable anymore, which means that since it's not predictable, since the growth could be in 5 years, could be in 7 years, could be in 2 years, we don't know. That means that stock needs to have a smaller allocation in my portfolio, and I think in a lot of people's portfolio, because now we don't have that consistent growth that we used to have. The deceleration is clearly pretty bad, despite the fact that they are nowhere near 100% of their total addressable market, right? If you look at the large and growing opportunity, this is the size of the market. They've only captured a teeny tiny size. This is a Teladoc here. That's from their 2021 report. They've only captured a teeny tiny size of that market, and revenue is not growing. Number of insured using the product is not growing. And, if I look at this revenue and I unpack and I try to look back at revenue, I'm like, okay, so I see mild revenue growth over the past few quarters. Keep in mind, this is not in base zero, right? We're doing some chart crime, as we call it here. We're starting at 300. So actually, if you were to start at a base of 0, you would see it essentially flat. I mean, they moved from 337 to 357 in 5 quarters. That's not very good. BetterHelp is doing a little bit better, and that's nice. I mean, although BetterHelp is for depression, I as an investor, I have a little bit of ethics. I don't necessarily like to see their depression product do so well, but I guess it's a needed service. But it's clearly stalled, and so this is from macro trends. If you look at their growth, these are their growth rate in percent. You can see that this company has been a little bit cyclical, although it's never fallen down to as little as 6% like they're guiding today. But, they've been through spikes. And so, you can see they had a big spike in 2017, 2018, and then back down. And they had another big spike today. But frankly, if you look at the length of the trough in revenue for this company, we would have been due for a spike this quarter. Like this quarter, we should have had a spike and another growth, and we just don't see that. We just haven't had that. I think the growth is really stalling at Teladoc, or if the growth is still in front of them, which fundamentally I believe it is, we can't know if that growth is going to be 2025 or 2027. And so in the meantime, time value of money, right? Why do we do the money? That's kind of a question. So, I'm starting to wonder, like, are there fundamental things? Like, I realize, of course, everybody wants to go back to the office. You probably, if you have a doctor, you probably want to see your doctor in person again. So there is a big trend to actually going back in person right now. Doesn't change the fact that the mega trend is still there. The mega trend of telemedicine, I believe, is very, very solid. And over the long run, we're still going to do more telemedicine than we are today. But today we're kind of in this tiny period of a counter trend, just because we've spiked so much in 2020 and 2021 in telemedicine. There is this whole return to normal trend that I think is a force against Teladoc. But that got me thinking, when I see all of these numbers and really not growing much, aside from BetterHelp is growing, but aside from BetterHelp, whether it's their integrated care members, in the millions, 80 million people, that's quite a bit. Their chronic care numbers growing, I guess, a little bit, but their average revenue per US care member, I mean, it's down. It's like it was $1.46 in Q4 2021, and now it's 1.44. That's not the right direction. And so one question that has me wonder is. So we know healthcare. We know a big trend in healthcare, at least in traditional healthcare, which sometimes I would call sick care. We tend to have a very good sick care system. Once you're sick, the system is outstanding, but at prevention is not so good. And so a part of the reason why healthcare is going to be growing is, of course, because of demographics. Baby boomers are getting older. The older you get, the more likely you are to need medical services, right? That's logical. But how many baby boomers are actually using telemedicine? I guess the point I'm trying to make is it mostly younger and therefore healthier people that use telemedicine? And if it is younger and healthier people who have a tendency to use telemedicine, at least for a foreseeable 5 years, then it's not very good for a company like Teladoc, because younger, healthier people don't need much sick care services, right? They need preventative care. And the company that provides preventative care, as you know if you follow the channel, it's HIMS. I love HIMS. I think HIMS has great preventative care. So I'm concerned about that. I'm getting a little concerned that perhaps the spike in usage for Teladoc and the telehealth services of Teladoc, that spike was in the aging population who was forced to use telehealth. It's not like he had a choice. You were forced to use telehealth back in 2020, 2021. And so maybe people go back to habits that they're more comfortable, especially they have to deal with certain types of health issues that the richness of the in-person contact, I believe, is still highly valued by a lot of people today. It goes against the megatrend, right? Over the long run, I do believe telemedicine is going to win. I just want to be perfectly clear. But right now, right, if it's people in their late 70s, I believe if you're in your late 70s, you are pretty likely to prefer in person. And so I think that's a headwind for Teladoc. Sorry, that was a little long-winded. Let me go on. There's some good for Teladoc. It's not all bad. So revenue growth is bad, and of course I'm going to be disappointed because I mostly care about revenue growth. That's how, to me, that's how you get a 10x investments, right? Revenue has to 10x. And then if the same price to sale ratio is applied after revenue 10x, you'd add a 10x investment, right? A 10 bagger. But there's some positive. Gross margin is quite positive, right? At 70.5%. Of course, here we prefer the adjusted number. GAAP, don't get me started on GAAP. We prefer the adjusted numbers. I prefer that at least. That's good. Gross margin is trending in a good direction. And same So they have some convertible debt, right? So that's not a risk to the cash on the balance sheet if the debt converts. But even then, if you and some of their maturity on the debt is much later on, so we're good. But even then, they have $980 million of cash on the balance sheet and operating cash flow that's positive of almost $200 million. So they have no risk of bankruptcy. So this has become kind of a steady Eddie, cozy value stock, more of a value stock, not really a growth stock, that really doesn't do much. And I just want to show you the chart, and actually it's pretty stunning, that chart. So we had the excitement of 2020 and 2021, and the stock literally shot up so much, right? And then the whole return to normal type of life started kicking in mid 2021, early 2022, and the stock was divided by 10. The stock lost 90% of its value, and if you go back, it's been essentially flat. Like if you start from May 2022 to today, the stock is essentially flat, like plus or minus 2%. So the point I'm trying to make is if you bought the stock anytime from, say, 2019 to 2021, you're very down on that stock. And, tax loss harvesting, it's available today. It's available in 3 or 4 years. It's gonna be available. This company is very, very cheap. I have a hard time, especially with the amount of short sellers they have. Like I have a hard time seeing this company get even cheaper. This company is so cheap. Let me go to the numbers, right? This company is trading at 3 times enterprise value over trailing 12 month gross profits. It's one of the lowest metrics in all of the stocks that I look at, and the market cap. Remember that market cap was much higher. That market cap was close to 60 billion at some point. So now the market cap is in the 5 billion-ish, and enterprise value is 5.56 billion. And what I want to say is, even if I'm being generous, and you know that this chart, if you've seen my channel, this chart is how much are you paying for each percentage point of growth. And Teladoc is getting expensive. Like Teladoc is nearing the average price for growth for some of the stocks I covered on the channel. Teladoc is getting expensive for healthcare, right? Healthcare stocks, oftentimes they don't have quite the valuation that we would like to see these stocks have. They oftentimes have kind of a lower valuation, and I would argue Teladoc is getting expensive for that level of growth. If they only do 10% of growth in 2023, to me that's getting expensive. Now that's more of a value stock territory, and if you're a value investor, I could see how you're very interested in Teladoc, but I'm not a value investor. I know who I am. I like to invest in growth stocks. So when I compare these metrics to HIMS, and I heavily, because we don't have HIMS guidance yet for 2023, they haven't reported yet, but analysts are thinking HIMS is going to do 69% guidance. I've heavily sandbagged it to 50%. I've been very, very unfair to HIMS. Really sandbags guidance in the same framework that I updated, comparing the stocks. And even by being so negative on the HIMS growth rate, I'm still getting a stock in HIMS that is 3 times cheaper. You're paying 3 times less for growth in HIMS that you are paying for growth in Teladoc. So I've made my decision on Teladoc and my decision for my healthcare exposure. And my decision is clear. Because Teladoc is now more behaving like a value stock and it's got no growth, I'm not as excited about Teladoc anymore. I believe that Teladoc revenue has become a little more unpredictable, if not definitely unpredictable. There's revenue growth, big spurts of growth, and then you have big droughts without any growth. And so even though a 2030 total addressable market, as I showed earlier on that chart, is absolutely tremendous, multiple $1 trillion of annual sales in addressable market, I have no way to know when Teladoc is going to make a dent within that addressable market, especially with that guidance, right? I can't predict that's going to happen anytime soon with that guidance. So when is the next 50% of growth going to happen to Teladoc? Is it in 2025? Is it in 2027? I don't know. And because I don't know, I need to trim my position in Teladoc to reflect the new risk. If you watch my video this morning on Coinbase, Coinbase is kind of the same way. I don't know when it's going to happen. Therefore, it's a much riskier stock, and I need to reduce my exposure. Teladoc is now in this category. I don't know when growth is going to happen. The risk shot up, and because the risk shot up, I am making the decision of trimming some Teladoc and moving those proceeds to HIMS over the next few months. I try to never make any stock moves, any stock decision. It's to me the whole idea that you need to average into stocks and average out of stocks. I think is a fundamental idea of trading, because if you invest on the worst day or if you invest on the best day, that can definitely mess up your investment returns. I'm looking at the overall return. So again, there's no urgent sell, right? It's not urgent to sell, I believe. No investment advice, but I don't believe it's urgent to sell. There's no red flag type of news for Teladoc, except that now it's a value stock and now it grows very slow. And so, the stock could be flat for many more quarters. The stock I don't believe the stock is going to move much. If it moves a lot, it's up to the upside because of a short squeeze. But if the short squeeze were to happen, that would be short-lived as well. So because I'm less excited about Teladoc's more certain growth, and because I know that growth now is very uncertain for Teladoc, I am slowly trimming Teladoc and putting into HIMS. I'm sad about it. I liked this stock. I liked their vision. I think that was a nice stock. So I'm sad about it. But I'll keep owning it for a little while and slowly move into HIMS. And I'm so excited for HIMS. And I will probably decide whether I want to allocate more to HIMS after their Q4, which they are set to report within a few days. So I look forward to that. Thank you very much. This was not investment advice. This is just entertainment. Thank you for watching. Appreciate any like I can get. Appreciate any subscribe I can get. Follow me on Twitter if you can. Thank you and have a wonderful day.